By seeing the title, you have already understand that what is this video is going to be. So this is the ICT's first video of 2024 mentorship, and this is going to be the wizard version. I will explain the way I have understand ICT's first video of 2024 mentorship. So this is gonna be the wizard version. Okay, I will try to go strictly, directly to the point, so that it will be easier for you to understand my understanding of this video. I will say that this is gonna be my thinking and this is how I understand. Okay, make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. So let's go to the video directly. In this video, ICT first explained the new week opening gap or the new day opening gap. So Friday close and Sunday open is your new week opening gap. Please mark that on, because that is your first liquidity void where market should reach. So that is your first target. That should be your first target. Now rest of the video ICT didn't talk about this gap, so I'm also not going to explain this gap. That's why I'm going to remove this one, and instead I would love to give the priority where ICT actually told smooth highs and smooth lows. Okay, if you are new, you are struggling with bias, then you should look for smooth highs and smooth lows. What do I mean by that? I'm gonna use the same area where actually ICT has used in his video. I'm going to use that same area. On my left, this 15-minute chart. On my right, this 1-minute chart. Look, this high and that high, they're relatively equal highs. And this is a very smooth, relatively equal highs. So when you have opened your chart around 8 a.m. Now, what is the time frame? I will talk about that later. First, let me explain what should you look for at first. You should look for smooth highs or smooth lows, something like this. There is a low and another low which is higher than that low. So this is your smooth lows. Okay, that should be your sell side liquidity. I repeat, smooth highs and smooth lows, not previous day high, previous day low, not session liquidity, no any other liquidity. Okay, your just relatively equal highs, relatively equal lows. That should be your first priority where you should look for after opening your chart. This high and that high, this high failed to take that high, so they are relatively equal highs. The more it will go way near to that high, that is gonna be more important relatively equal highs or smooth highs. That should be your first priority. Now when you are around 8:30, you have opened your chart around 8 a.m. What should you look for? First, you should look for relatively equal highs, which is called smooth high by this video by ICT, or relatively equal lows or smooth lows by ICT. Okay? That should be your first priority. Again, no other liquidity, nothing. Just that one should be your first target. Now, second, I would love to explain about time frame, what ICT told. If you are new, and if until ICT doesn't give us any depth price action, you should strict with 3 time frame. 1, 15-minute time frame. 2, 5-minute time frame. 3, 1-minute time frame. No hourly time frame, no 4-hour time frame, no daily time frame, no weekly time frame, just nothing. 15-minute, 5-minute, 1-minute, 3 time frame. In this time frame is enough for you. You don't need any other time frame. Trust me, brother. I'm also a YouTuber. I'm trying to teach you this concept for so long now. I keep telling you, just look for smooth highs or smooth lows, no other liquidity, which ICT has directly told in this first video of his 2024 mentorship. Secondly, I told strict with 15-minute chart and 1-minute chart. Now ICT told about 5-minute chart, so I'm not gonna exclude that from this video. I would love to say 3 time frame: 15-minute, 5-minute, 1-minute, no other time frame. You will understand why 5-minute chart. How we are going to use that 5-minute chart as well. I believe that if you have already watched the first video of ICT, you have already seen that ICT didn't talk about anything in 5-minute chart except the liquidity. See, he just talked about the liquidity, except that liquidity didn't talk about anything in 5-minute chart. But it's okay. When ICT talked about that, I would love to add that 5 minute chart as well for your understanding. If you ask me, you just need 15 minute and 1 minute chart. No other time frame. That's my opinion only. Okay, I'm not going to go against ICT. 5 minute chart is also okay. Okay. In these these three time frame, all you need, and you have to look for some things around that area. What is that? Smooth highs. So in 1 minute chart, you can see this relatively equal highs over here. By anyhow, it's mini S&P. Let me actually make it in Q. Just let me make it Nasdaq. Okay, so over here, this is Nasdaq. Actually, I'm sorry for that because I didn't see that it was mini S&P, but obviously it should be Nasdaq. So from these three time frame, that means 15 minute, 5 minute, 1 minute. In this three time frame, you will look for smooth highs or smooth lows. If you look over here on your left, this 15 minute chart, this high and that high, they are relatively equal highs. Over there, they are relatively equal highs. I'm going to mark this one only from 1 minute chart as ICT marked that one only. Later, ICT went to 5 minute chart and he actually added this high later. Okay, but I'm going to keep it over there from 1 minute chart. But remember, this is also 15 minute relatively equal highs or smooth highs. This high and that high, they were very near to that area. Okay, each of them were very near to each other. This is your first thinking. This is your first thing you should look, that is smooth highs or smooth lows. What should you look for next? The time frame. Which time frame? 15 minute chart, 5 minute chart, 1 minute chart. In those time frame, what you are going to mark? Relatively equal highs, relatively equal lows, and the inefficiency. That inefficiency is not important for your bias. For bias, you need smooth highs or smooth lows only. That's all, nothing else. This is how you are going to build your bias, expectation, which way market is actually going. So as ICT told, I'm also going to repeat his word one more time. How do I know where market is going? How do I know exactly what is market is going to take? This is how I know. This is how ICT knows. I learn it from ICT. That is my clarification, that I'm giving you something that is more specific. No previous day high, no session high, no Asia session, London session high or low, something like that. No, nothing. They're bullshit. As you are beginner, you need just smooth highs and smooth lows. Now, these highs and lows, whatever you have marked as your bias, it doesn't mean that this is going to be taken by that that specific session. It doesn't mean that. It can take later. So here the time is factor. What is the time? As you have started your price action reading from 8 a.m. So from 8 to 8:30, this is the time frame. Prior to this time frame, you will look for that relatively equal highs or relatively equal lows. 8 to 8:30. You are allowed to trade from 7 to 11, around 11. Okay, so in this time frame, ICT actually talked about in his first video, where 7 to 7:30, 8 to 8:30, 9 to 9:30. This is the area where you will look for this relatively equal highs, and ICT told every single of the time market will go for that relatively equal highs or inefficiency. Okay, in that time frame you will mark the relatively equal highs for your bias, and market will go for old highs or old lows or inefficiency. I'll come that in after a little bit. Okay, when I'll talk about this price action, I'll come over there. But this is the time frame. Here I'm just explaining the time frame, 7 to 7:30. That is the time frame where you will start to look for the smooth highs or smooth lows. Now 7:30 to 8, that is opening gap. Then 8 to 8:30, where you will start to look for relatively equal highs from where? From three time frame, 15 minute, 5 minute, 1 minute. And from 8:30 to 9, that's gonna be your opening gap. From 9 to 9:30, you will start to look for smooth highs, smooth lows. 9:30 to 10, that is gonna be your opening gap. You can use that opening gap. That's different matter. You know, maybe you know how to use that opening gap, or maybe you don't know. You can learn it. It's up to you. But this is the time frame you should think about when you should look for that smooth highs and smooth lows. Now, when this smooth highs or smooth lows is going to create before 8, if you are looking from 8 to 8:30, then that smooth highs or smooth lows should be created before 8. Maybe you are around 7 to 7:30 time frame. You should look for that relatively equal highs or relatively equal lows before 7. Maybe you have started to read your price from 9 to 9:30. Then that relatively equal highs should be before 9. Okay. So this is all about the time frame. Now, if you have both relatively equal highs or relatively equal lows, what you are going to think? You should wait to see what market is going to do first. As you can see, you had this relatively equal lows around that area. Market has taken that relatively equal lows. Then market should go for that buy side liquidity or smooth highs. Maybe market has taken that smooth highs. Then market will go for smooth lows. So if you have both of those smooth highs and smooth lows in that type of situation, you will wait to take one first, then it will go for others. Okay, this is how you will use if you have both relatively equal highs or relatively equal lows. In other words, smooth highs or smooth lows. Now let's come over here. When market has taken that smooth lows over there, then market has the displacement. It went through this high. Look over here. It went through that high, right? This is an old high which has been shifted over there. This is the displacement. What do you mean by displacement? Displacement is it is going to be against the fall, maybe the session run. That means market was falling, right? It was falling. Then suddenly you got a run against your direction. Market was falling, 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 and suddenly you got that run with displacement. Maybe market is going higher. Okay, it is going higher around that time, and suddenly you saw that boom, a displacement against the run market was doing. So you saw that market has done that things, went above that high. Okay, it went above that high, traded that order block. Now you can ask me, brother, you told about order block something else. I'm not going to explain my opinion about the order block. I'm just gonna explain ICT's order block. This is order block. The reason is it has created around 8:30 a.m. Okay, so prior to 8:30 a.m. this is your order block. It can create around 8:30 exactly, or maybe just after a little above. After a little of 8:30, it can create any of this time frame. Same thing. That type of order block, that is change in state of delivery, can create around 7:30 or around 7:30. Okay, I mean prior to 7:30, 7:31, 7:32, 7:33, 7:34, 7:36, something like that. It can create around 9:30 as well. So this is some kind of order block. I have also learned it from today by his video. That order block or the change in state of delivery can create around that time frame. Okay, so 7:30, 8:30, or 9:30, around that time frame. I mean prior to that time frame. So it is important to notice, and you should actually take the notes. So when it happened, market went higher, what should you look for? You should look for old high, and if you have the old lows. Now, as you know that market is going for that smooth highs, and you can see here market didn't leave any smooth lows because this smooth lows has taken over there. And this is not smooth lows. What is the smooth lows look like? See this low and this low. Okay, so this low sorry, this low failed to take that low. That is your smooth low. This low will be very near to that low. That is gonna be more strong. Okay, if it is little bit near to that low, there is nothing wrong as well. So it has taken that smooth lows and didn't left some kind of lows like that. Look, it didn't left it. Instead, like look at there, this low and this high and that high, they are relatively equal highs. If you look over here, that high, let me mark that high as well. If you look that high and that high, they're relatively equal highs. If you mark this high, then this high and that high, smooth highs. Okay, I'm gonna keep it here again because it is also only important by ICT's video, so I'm gonna keep it over there. Prior to 8:30, market has taken that smooth lows, market went higher. This is your old high. You should see this, okay? You should see this every single of the time. Every single of the time, as ICT told, this is his word, market is going to do the same thing. You will mark old highs and the inefficiency. So around that area, you see this little inefficiency, I'm going to mark that inefficiency. Okay, so there is your inefficiency, and you can see market has traded that efficient area. Then market went lower. Why did it trade? Why did it trade? This specific order block. Okay, why this is order block? I have already explained. Prior to 8:30, this is the lowest down to body close candle around 8:36. This is your order block. Then market started to go higher a little bit. Finally, it tapped to this volume imbalance. I'm going to mark that volume imbalance over there. Okay. This is the part where ICT told you should do the journal. Okay, you should keep a screenshot. You should count how many candle market has taken. How many candle it has taken to reach above this old highs. So look at this old highs. Okay, how many candle it has taken to reach above those old highs and to this parallel gap. This inefficiency. This is going to happen every single time. Every single time. Over here, ICT actually add those volume imbalance as well. So over here, there is a very small volume imbalance. If you'd love to mark until this volume imbalance, that is also cool. So ICT has marked all of them. So I'm going to mark them as well by one box. You will start to journal how many candle? 1, 2, 3, 4, 5. It has taken 5 candle to reach over there. If you count them and write it down maybe in this empty space, around that area, first market has taken smooth lows. I have seen smooth highs from different time frame, from 5 minute, 15 minute, 5 minute and 1 minute. So that was my bias. Prior to 8:30, I have seen that market has taken that smooth lows, then displacement. Market has traded that order block. It went little higher, then tapped to this volume imbalance. Boom, it went to this parallel gap. ICT told it is going to create every single time. So I'm gonna count these candles and how many times it is going to take to reach to that inefficient area above that old highs, relatively equal highs or old highs, anything you can say. Also these old highs, how many candle it has taken, you will count that, you will write everything over there and you will take a screenshot. This is how you will journal every single day. This is how you are going to build your strongness, your belief that market is actually reaching over there, and you will understand that it should go over there very fast, or maybe it will take a lot of time to reach over there. This is all will depend on your journal. When you will see that maybe, for example, you have seen that most of the time market reached to that inefficient area or maybe some kind of relatively equal highs very fast, maybe by 3 to 4, 5 candles. And suddenly some days you took an entry over here, for example, and you were seeing that market is spending like 15, 20 candles, but didn't reach over there. You will close your trade. This is how you will build your confidence that market is actually reaching over there, because in your past, you have already journaled that. This is why this journal is important. Okay. This is the reason for being that journal most important part of this trading. So finally, market has taken that old high, reached to that area, how it has reached. Now you can say, brother, when we are going to leave that order block or inversion parabol gap or the breaker block? In that question's answer, ICT talked about this breaker block. Okay. So I would love to explain this breaker block over here the way ICT explained. So from here to there, this is your consecutive breaker block. I'm going to mark it as a consecutive breaker block. So let me actually mark it consecutive breaker block. So this is the breaker block. This candle has created when this candle has created, this breaker block was valid. Okay, it was valid. Market came back again to this breaker block. Look, nobody closed below this min threshold. Then it went higher. What is the breaker block most sensitive candle? See this candle, the highest up close body close candle. That is the most sensitive candle for the breaker block. This is the most sensitive candle, and you can see how beautifully market respect that breaker block. Wick did the damage. Wick did the damage. How beautifully market use that breaker block. Maybe you don't know how to use this breaker block. That part I will come later when you should take entry. This part I will come later. So let me explain this thing first, then I will come later about when you should take entry. Right now, you are not trading. You are reading the price. Around 8:30, 8 to 8:30, you are reading the price. You are not thinking that I'm gonna take an entry. No, you are reading the price. You are seeing how it is going to work around that time. When you should take the entry, I will come that part at the end of this video. When you should look for that trade. That's not my opinion. Obviously, that is ICT's opinion. Okay, so I'll come that later in this video. I'm just gonna explain every PDR over here. So market has finally came here. It went higher. Now when it came here around that area, what is the time frame? Around 9. So after 9, what market has done over there? This high, I'm going to mark that high. Now this high and that high. Look, this high and that high. They're smooth highs. You have this smooth highs. Now you have this smooth highs. This high failed to take that high. If you look over here, then market come back again there and market went little lower. It went higher again. What it left over there? Again, smooth highs. Okay. This high failed, this high failed to take that high. Then market fall again. Where did it came? To this breaker block one more time. Then it went higher. Perfectly, it went through this fair value gap to this buy side liquidity, that buy side liquidity, and finally this buy side liquidity. Remember the first smooth highs, that was your first smooth highs. If you go to your 15-minute chart, if you go to your 5-minute chart, if you go to your 1-minute chart, you will look the smooth highs over there. That was your bias. So finally market has reached over there. Now I am making this video too fast, too long. I didn't want to do that. Now I'm going to close this video. That is the theme I got from ICT's today's video. I'm gonna close it by explaining when you should take the entry. By explaining that, I'm gonna close today's, I'm gonna end today's session or today's video. I hope that it will be insightful for all of you guys. If you think it is insightful, please don't forget to give me the thumbs up. Don't forget to subscribe to my channel if you are new. I'm doing this for your help. I will expect the same help from you as well. Okay. You can see there is a small fair value gap. I'm going to put this fair value gap over there. That was the last inefficient area. This is also the last inefficient area. Market went through this inefficient area and took that buy side liquidity. Before doing that, there was a very small fair value gap over there. That was the fair value gap. Okay. I forgot something to tell. I would love to add that on. When market was falling, ICT talked about here. It is going to take this low, old low. See this low? It was going to take that low, trade that breaker block. It doesn't need to trade this area. Why? Because that is balanced. Look at this back and forth, back and forth, back and forth price action. There is no inefficiency. That is perfectly balanced. So market doesn't need to take that area. It doesn't need to reach to that area. But here, this old low, market has taken that old low, trade that breaker block, then market, how beautifully it went higher. When there was an imbalance, look at this imbalance. Market trade that imbalance at the same time, that weak 50%. Okay, that weak 50% was also important. ICT didn't explain why that weak 50% is important. But as he told, I'm just telling you that weak 50% was also important. Market trade that specific imbalance to that buy side liquidity. You are going to count 1, 2, 3, 4, 5. It has taken 5 candle to take that buy side liquidity. Just look at this thing, write it down to your empty space, take the screenshot. This is how you should journal so that in future you can get more, confident to take buy or sell when you are going to trade. Now, here is the question, brother, when we are going to take the entry. This is the whole price action. Maybe you are unable to frame that breaker block. Maybe you are unable to frame that volume balance. Maybe you are unable to frame, that order block, this order block. You should, this is good for you. You saw this thing, okay? Market went lower, take this liquidity. There's a market structure shift, fair value gap, market trade that fair value gap, boom. You should keep looking this whole price action. Then whenever you will feel confident, whenever you are going to be very confident, maybe for this breaker block, maybe for this order block, maybe for this volume balance, maybe for that fair value gap, wherever you feel confident, you are going to take that entry. If you don't look this breaker block, then it's not your period. You are not going to use this one. Always try to be strict with one model. That is my advice to you guys. Always try to be strict with one model. ICT has shown you all of these things over there, how you can look for the entry. Where is your most probable entry setup can create that, but that doesn't mean you are going to take that order block entry, that volume balance entry, that breaker block entry, that parallel gap entry. No, you are not going to do that. Instead, you should look for one specific model and you should be master of that specific model. Which one you are going to see, I don't know. That's your choice, bro. First choice your model. Whatever you can look most of the way, most of the time, very easily. If you see that model has created over there, maybe for this one, maybe for that one, take that buy whenever you will see that. If you don't see that, don't take the entry. So if you can trade from 7 to 11, depending on your geographical area, by the way, all of this time frame is depending on US local time, New York local time. By the way, when ICT talked about Bangladesh, I was feeling very good because now ICT knows about Bangladesh. And very soon he's going to learn about, he's going to know about the wizard from the Bangladesh, okay? I'm sorry. So that was the part of today's video. I hope that it's insightful for you guys. So until the next video, cheers.